So for the purchase of computers, we're going to make a mistake on purpose. For the rent expense, we're going to make a mistake on purpose for a journal entry. Hey guys, in this video, we're going to learn how to uncover and fix accounting errors. So what we're going to do is we're going to take 6 business transactions. So we have 6 transactions here. We're going to prepare the journal entries for them. And then we're going to take the closing amounts and create a trial balance. And then from there, we're going to create an income statement and a balance sheet. But here's the caveat. Here's what we're going to do. We are going to make a mistake on purpose in 2 of these recordings. So for the purchase of computers, we're going to make a mistake on purpose. For the rent expense, we're going to make a mistake on purpose for a journal entry. And then we'll see where that issue is going to come up. Where is the mistake that we made in the journal entries is going to show up in a trial balance, income statement, and balance sheet, right? And then we're going to go ahead and fix these mistakes and get the correct amounts. So if this sounds good to you, let's go right ahead. All right, let's get started. So we'll go through these transactions one by one. So the first transaction, the owner invests $100,000 in the business. So this is a business owner starting a new business, investing $100,000. That's going to be debit to cash for $100,000 and credit to equity $100,000. So far, so good. Easy enough. Okay. The second transaction, purchase PCs for $10,000. And remember, we said we're going to make a mistake on purpose with this one. We're going to mess it up on purpose. So normally you would debit equipment or fixed asset and you would credit cash, but we are going to reverse that on purpose. So we're going to write it here with a red font so we can see. So we're going to say that the cash, $10,000 debit, even though that should be a credit, but we're going to debit it, right? And for fixed assets, normally you would debit it because you just purchased computers, but we are going to go on purpose and put in $10,000. Okay, so we messed up this entry here and we'll see the ramifications as we go further in this flow. All right, transaction number 3, purchase furniture, $25,000. Okay, similar to computers, that would be debit to fixed assets. If you do it correctly, you would do debit to fixed assets, $25,000, right? And you would say credit to cash, $25,000. Okay, so this one we're going to record correctly, no problem. Transaction number 4, make sales for $60,000 on credit. Okay, so we sold $60,000, easy, okay. Debit to accounts receivable, $60,000, and credit to sales for $60,000 also. Let's go to the next transaction. All right, so we got pay salaries, $30,000. So it's going to be debit to expense and credit to cash. We have salaries right here. So debit $30,000 and credit $30,000 to cash. And the last transaction here, pay rent $20,000. And again, see this red X? We're going to mess up this entry here also so that we can see the effect of that entry. So normally you would debit expense, credit cash. We're going to flip that. We'll say, where's the expense here? Rent instead of debit, we're going to say $20,000 here. I'm going to write it again in red so you can see this is the one that we did by mistake, right? And for cash, instead of credit to cash, we're going to reverse that also and say debit to cash. Debit to cash, credit to rent. Again, we flipped it. So we're making that mistake on purpose. Okay, so we went ahead and recorded all of the business transactions. Now what we can do is get the closing balances for each of these accounts. So for cash, we're going to add up our debits, 100,000 plus 10 plus 20, that's 130,000. And the credit side has 25 and 30, that's 55,000. Okay, the difference between 130 on the debit side and 55 on the credit side is going to be 75,000. So the closing balance for cash is going to be 75,000. We're going to take the 75,000 and put it in the trial balance and the debit side. Okay, equity, we have a credit balance of 100,000. So we can transfer that right here for equity, 100,000. So far, so good. Rent, 20,000. credit. So rent here. Normally it would have a debit balance because it's an expense, but because we made a mistake, it has a credit balance. So let's go ahead and write that in red, 20,000. What do we got next? We got sales, 60,000 on the credit side, 60,000. So for sales, we're gonna go ahead and put that in the trial balance. Sales, 60,000. Okay. Fixed assets, we got 25,000 on the debit side and 10,000 on the credit side. So it has a debit balance of 15,000. The difference between the debit and the credit. 25,000 minus 10 is 15,000. That goes into fixed assets. Up here, fixed assets, 25,000 or 15,000 rather. 15,000. All right. Salaries, $30,000 balance, no problem. Salaries, 30,000. And AR, 60,000 balance, that is a debit side, $60,000. Okay, good. Now let's go ahead and add up our debits and credits. So for debits, we got 75 plus 60, that's 135 plus 15, that's 150 plus 30, that's 180,000. Okay, and on the credit side, we have 100 plus 60 plus 20, that's 180,000. So notice that's one of our first findings, is that the debits and credits were still balanced, were still equal in a trial balance. That's not gonna show up here. And the reason why it's not showing up here as a problem is because when we recorded a journal entry, our debit always equals our credit. So the total is gonna be always equal. So 180,000, 180,000. Let's go ahead and prepare the income statement to see what we got. So we got sales. Well, our sales were $60,000. $60,000. Operating expenses, we got salaries, 30,000, right? We got rent, 20,000. However, this 20,000 is a credit, see, because we made the mistake. So 20,000, I'm gonna put parentheses here because it's a credit. Total operating expenses, 10,000, because we're adding 30 positive and 20 negative, that's 10,000. So then our net income is gonna be $50,000. Okay, good. Let's move on to the balance sheet. All right, cash balance. What do we got? 75,000 plus accounts receivable, 60,000 plus fixed assets. What do we got? 15,000. So let's add up our total assets. 75 plus 60, that's 135 plus 15, that's 150,000. For the other side, liabilities, well, we have zero liabilities. We simplified this example. There is no accounts payable. We paid everything in cash, no liabilities. Okay, equity. We got seed investment here. We got the equity portion, 100,000. Retained earnings. Well, retained earnings is going to be what we got here. So we got $50,000. This is the net income that we have. So our total liabilities and equity is 150. Again, that's equal. So we got assets equals liabilities and equity. So far, the same problem that we had here, the same mistake that we made here is flowing to a balanced trial balance and a balanced balance sheet. But the problem that we have when you look at these financials, we notice that we have a negative expense. So whenever you have a credit and an expense, that's gonna spark a question. You always have a question when you look at an income statement that has a credit and an expense line item. So when you look at this, you say, okay, this could be a potential mistake, and that's gonna uncover all of these things. Okay, so now let's go ahead and correct these mistakes, and then we're gonna correct our trial balance, income statement, and balance sheet. And if you're liking my teaching style so far, you're gonna wanna check out my Controller Academy program, where I start from the basic accounting, and then I build up to intermediate and advanced accounting topics. So we look at recording of transactions, like equity, revenue recognition under ASC 606, accrual examples, closing the financial periods, preparing and analyzing the financial statements, and all of this stuff. I'm gonna link to it down below. But go back here, let's go ahead and go back and unwind the mistakes that we made here so that we can prepare correct income statement and balance sheet. So going back to the first item that we booked by mistake, purchase PCs for $10,000. Well, the $10,000 in cash should be a credit, right? So we're gonna record that as a credit. And for the fixed assets should be a debit. So let's go ahead and correct that mistake. And we're gonna go ahead and correct the totals as well. So that would be also a debit to a fixed asset, $10,000, and a credit to cash for $10,000. The second one that we messed up was pay rent for $20,000. So let's record that correctly. The $20,000 was misrecorded. It should be a debit of $20,000, right? Making our closing balance here for rent, $20,000. And for cash, let's go ahead and correct this as well. The $20,000 that we recorded by mistake here on the debit side should be recorded as a $20,000 on this side. All right, so what do we got here as a closing balance for cash? We got $100,000 on the debit side, and we have cash going out 25 plus 30, that's 55, plus 10, 65, plus 20, that's 85. So then the closing balance for cash is 100,000 minus a credit 85,000, that's 15,000. So let's go ahead and correct the cash balance. And instead of 75,000, it should be 15,000. And then for rent, the rent balance should be 20,000 to the debit side, right? So instead of being in the credit side, it should be debit 20,000. Right? And then fixed assets, we said now that we corrected the 10 grand, it's going to be on the debit side. 25 plus 10 is 35,000. 35,000 fixed assets. So we're going to correct this from 15 to 35,000. That's going to change the totals for the trial balance. So instead of 180, let's see what is our new total. So 15 plus 60 is 75 plus 35. That's going to be 110 plus 30, 140, and then 160,000. And on the credit side, 100,000 equity plus 60,000 in sales. That is 160,000. Now here with the income statement, we said that our sales are 60,000. That doesn't change. Salary is 30,000. Doesn't change. Rent, we said it was a credit or a negative 20. Now we're saying it's positive 20. So that means that our total operating expenses, instead of 10,000, it's 50,000, right? And that means our net income or loss is a 60 minus the 50, that's 10,000. Good. Now let's move over to the balance sheet. The cash balance is not 75, it's 15,000. AR 60, that doesn't change. Fixed assets 15,000. Nope, fixed asset is 35,000. 35, right? Which makes our total assets 15 plus 60 is 75 plus 35, it's 110,000. And on the liabilities and equity side, we said liabilities, we have none, paid everything in cash. Equity, we have seed investment 100,000. Retained earnings, instead of 50, is 10 now. That's the net income for the period, right? 100 plus 10, that's 110. And that will be the correct balance sheet. Okay, so this is today's video. If you have any other questions in the same topic, go ahead and leave it in the comment section below. I'll try to address it in future videos. If you got value from this video, go ahead and hit that like button and share the video with someone else who will benefit from it. And I'll see you on the next one.